The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we found a little bit of green on the screen in the row crop trade on Tuesday. That was positive, slightly lower crop progress or crop condition numbers, I should say, on the crop progress report Monday, maybe playing a role as we were definitely in that weather market. Wheat, though, continuing to feel the pressure. Livestock, mostly lower day as well. And all this coming ahead of the federal Juneteenth holiday on Wednesday. So maybe some positioning there. Let's talk about all of this. Joining us now for markets, Tyler Schau with agmarket.net is with us here on the show today. Tyler, welcome back to Market Talk. How are things in North Dakota?
It's a little bit chilly here in North Dakota. I think we got temperatures in the mid 50s right now. It feels like winds blowing, kind of drizzling. It feels like a nice early April day, to be right honest with you.
I was going to say, is it April or March or something like that? What is going on?
It's North Dakota. That's what it is.
Okay. All right. Fair enough. Well, yeah. I know it's been a little bit of a challenge in some areas, a lot of heavy rain up that way here the last couple of days as well. And, some worries about will we see prevent plant acres, things like that. I guess I've heard some chatter that maybe not that much in the way of prevent plant acres across the Dakotas, and a lot of farmers at some point somehow getting this crop in the ground. Tyler, are you hearing the same?
Yeah, we had quite a few of our partners with JSA reach out 3 or 4 weeks ago asking our thoughts on prevent plant in North Dakota, and they were hearing rumblings from others that we could see 20% prevent plant, and we threw the flag on it, said no, we'll get most of it planted. I have heard that there's some, in that Fargo to Castleton area, they did get a lot of rains. There might be some prevented plant in that area. But while that area is very important and they do grow a lot of beans there, North Dakota's a pretty large state with a lot of acres spread out. And I would say for the most part, prevent plant isn't going to be a major issue, at least this year up here. Now, you get into Minnesota, eastern North Dakota and Minnesota right now, they are pretty soggy and just seem to be continue to get rain. It looks like on the maps that we're going to see another couple days of heavy rainfalls through that area. Obviously, they've got the crop in the ground, but cold, wet, soggy soils aren't exactly the best for growth on those corn plants right now.
No, definitely not. Definitely not. Well, and to think about that as well, I can't imagine that a lot of that's going to get reflected on the end of the month reports from USDA. Maybe a little bit, hard to say, but I think that's maybe a small piece in traders' minds, but largely it just feels like we're in that volatile weather market season where we're going to see some of this ebb and flow with the latest model runs and the crop condition reports and things like that. And just the seasonality, especially in these row crops, really just feels like we're in that window right now here. We'll have a day lower, a day higher, and kind of just back and forth without a real fresh story to move things, right?
Yeah, I like to call it colorful map season. We're in that time on the calendar where we get these really colorful maps that come into us from the Euro and the GFS, and we debate which one's more accurate. And the markets, as soon as the new run comes out, the markets are going to trade that new run until the next new piece of information comes out. And so right now it's kind of the argument is one of them, and I believe it's the Euro, has a little drier, hotter outlook over the next 10 days, whereas the GFS is pumping a little bit more moisture and less heat. And so there's a lot of banter going around, which one is more accurate. It's hard to, everyone's got their own opinions on that. And I'm not a meteorologist, so I stay out of it. I focus on risk management and what we need to be doing. And what I'll tell you is if you're behind the 8 ball, I wouldn't be betting on a low acreage report coming out next Friday. I would be looking at how do I put some protection on in case something negative happens.
Good thoughts there. And thinking about protection too and risk management, it feels like with this week with the federal Juneteenth holiday, it's an odd midweek market holiday. Not that it's an odd holiday. It's just it's odd for the markets here when we throw this in the middle of a summer weather season. That I felt like we saw some consolidation on Tuesday's trade, but I felt like we could have maybe seen more. But I also wonder if that adds a degree of volatility as we get back to trading into Thursday, Friday in front of us. I mean, what do you think about that?
Yeah, I do agree. It's a weird setting for the day off of the markets. Throw into that, we get a full week of trade next week, but you've got the acreage report coming out on the following Friday, and then you've got another midweek holiday the week after with July 4th, I believe, falls on a Thursday. So we're going to have a lot of breaks in the trade. You've got some major reports coming up. You've got some major things that come up, and it's going to play a role in how those markets trade. It's going to be difficult to figure out. You could be up big one day, kind of like we've seen here the last 2 days. We were down big yesterday and got most of it back in corn, 2/3 of it back in beans. And you're right, it might just be the fact that we're trying to square up positions for a day off.
It just adds that extra layer, that extra degree to this market. And, we talked about this a little bit before. And I've talked about this quite a bit the last few weeks. In a weather market, seasonal market environment like this, especially corn and beans, risk management wise, a good time to kind of have some of those orders working and whatnot here, just because depending on how this all goes, wide swings, things like that, orders could get filled while you're sleeping or, early in the trade, things like that. It's just seems like a very prudent thing to do to have some orders working out there, Tyler.
Yeah, and one other date I forgot to mention in the midst of all these holidays and the acreage report is July options expire on Friday of this week. So throw that into the mix. There was a lot of people in our book of business that had July short dated options on corn and beans. And it seems like those are going to come, the strike prices are, at least on corn, are right in this neighborhood where corn's trading right now. And so producers have got to kind of make that decision. What do they do? Do they let those options, those put options roll into short futures positions? Do they kick the can down the road another month and roll those options out? And one of the things that, we talked about in a meeting yesterday that I think bears kind of publicizing and letting people know, when you buy a put option, that's really a bullish strategy. You're putting on a floor in case the market goes lower, but you're making a bet that this market's going to move higher. So one of the things that we like to talk to people about, all right, if you've got those puts, make sure you've got some orders working to make sales on those rallies, because you don't want to be the person that spends money on puts, never makes any sales into those rallies, and you end up facing this same scenario the end of July and then again in the end of August, where we got to decide what we're going to do, and we kick the can down the road another 30 days.
Yeah, it's kind of that you don't want to like start half the marketing plan and then not do the other half and see it through. You don't want to have a glass half full, half, but the other half's empty kind of situation there. It's like if you do the one thing, you got to make sure you do the other, right?
Yeah, you do. You've got to make sure there's something out there that puts the sale on and gets it done. And we talk a lot about marketing plans and strategies. And one of the things I like to remind people is a plan is nothing more than a set of price and time targets, right? And so if I buy a put, say I've got July short dated puts that are 460s and they're going to expire this Friday and the market's at 467. I spent money on that put. I don't have a sale right now. And so, I've got to decide, I set my price target at 460. The market's above that. Now I've got to, pay the piper on that time target. It's time to do something. And if I'm, like I said, if I'm just kicking the can down the road, that's more premium I'm spending, and overall lowers my overall floor. So, it is time. And I know a lot of times, especially where we're at, I mentioned how cold and wet it's been. A lot of guys are telling me the corn crop is behind, and that's in the back of their mind. They're not real happy about marketing 460 corn here. But at the same time, when you're looking at 2 billion bushel carryout, it's hard to be really bullish corn prices in the long term, especially when we move into harvest. So,
We're talking with Tyler Schau from agmarket.net here today on Market Talk. Tuesday's markets again. Quarter beans found some support. Wheat was under pressure. We're going to talk about that in a second. Mixed action in livestock, too. All of this ahead of the Wednesday, Juneteenth federal holiday. No markets on Wednesday. In soybeans, real quick, too, I wanted to ask you, felt like some intermarket spreads there Tuesday, front month, kind of the leader, new crop, not, it was a little higher. Was that a case of some of that July options expiration you were talking about coming into play? Was it end users trying to pull some of those gambling bushels of beans out? What do you think?
Yeah, so there's a couple stories brewing there. The July Nove spread is at 42 cents, and it wasn't all that long ago. We were down at about a dime, and that thing really blew up today. You've got a few things going on. It seems strange because for the last 3 years we talked about drought conditions and the low Mississippi River levels, and now we're talking about high Mississippi river levels, and that is affecting some of the loadings on the river, and you've got some loaders that are shut down now. So it really has to do with delivery values and all those delivery calculations that are going on in the river. There is, one of the things that we've talked about a lot is the farmer disengagement, right? The farmer has just kind of stepped to the sidelines. They've got bushels locked up in grain bins, and they're not getting rid of them until the prices are higher, or they have to. It kind of feels like it's in one of those showdown type scenarios. So I do think, the crush pace has been outstanding. There was a lot of talk about the NOPA crush and how poor it was on our May report from April. But then we got the May report here just a few days ago, and it was a really good crush number. Crush margins are high, so they're chasing those soybeans. They're trying to find them. Your nearbys are pushing higher, and the spreads are just trying to work those bushels loose. And I think to really get them, we're going to have to see the soybean market respond accordingly.
All right. Can we find anything good to say about wheat? 13 of 15 days, I think, lower, very oversold, it feels like to me in futures. I know spring wheat looks good.
Yeah.
KC wheat harvest is advancing rapidly. I feel like both those things, though, may be adding some of this pressure into the futures trade, Tyler.
Yeah, we've been talking about this with our customers for about a month now. One of the guys in my office actually started doing a bunch of digging and was trying to find an analog year where the fundamentals kind of matched, and ended up coming up with 2009, where the U.S. domestic carry out ending stocks, all that production kind of lined up with what we're expecting here in 2024. And then we laid the charts over top of one another, and it was amazing how similar they were from January 1 to, at that time, late May. And in 2009, we hit that first week of June, and Minneapolis September wheat was at like $8 in 2009. By the time that contract went off the board, it had gone sub $5. And at the time, we were trading almost $8 on September wheat. And we said, well, we'll find out if this chart, if they're going to continue following each other, in the next week. And I hate to say it, but they've matched up almost identical, which tells us we still feel like we've got another dollar worth of downside pressure ahead of us. So we've been, over the last few weeks, been pretty aggressive buying put options, out of the money puts for cheap, and buying way more of them than we needed. And right now, I would love for a 20 or 30 cent rally to get more of them on. I don't know if we're going to get that opportunity.
Let's talk some livestock, and I'll start with the cattle trade. We got a cattle on feed report coming Friday after the close. Felt like even Tuesday was a little bit of that consolidation trade ahead of the holiday, and then we'll see probably what cash does Thursday, Friday ahead of the cattle on feed. And so could be another somewhat quiet week in cattle futures. I know cash trade, though, that's been one of the big drivers here, I guess. Your thoughts in this cattle market here as we look at things this week, Tyler?
Well, I mean, cash has been the driver. Friday we had an explosive day higher. I mean, if you think back to that on feeder cattle, at one point we were up $5.
Yeah.
That's half of a limit move now, and that used to be a big deal. And it just kind of felt like it's another $5 move in feeder cattle, big deal kind of a day. The cash prices have stayed strong. We have got a kit in here that tracks the feeder calf index and kind of where that's headed and gives us some direction there. And it feels like the cash prices on feeder cattle are pushing higher again this year in June, just like they did last year. Remember, they pushed really strong all the way into September. You're going to start seeing some of those video auction sales pop up. And the first one was last week. Superior had a sale, and it was nuts. They were paying really high prices for calves. The fat cattle cash market has been explosive. One of our brokers is in Northwest Iowa. They feed some cattle, and they sold some fat cattle at 197 off the ranch the other day. So you're seeing some of the highest cash prices you've ever paid in both the fat and the feeder calf market. Ideally, the futures market would square up to that. But bear in mind, we don't have a real great physical settlement mechanism in both of them that we do in the grains that kind of hold that futures market true. And I'm sure the packers are going to be scrambling to try to figure out how they put a cap on this thing and push prices lower as they move forward. They felt like last week they kind of ran out of options and they just had to go to the cash market and start buying.
Yeah, that's a good thought. Someone posed a question too, or a statement on our YouTube channel a few days back, and I wanted to float this by you. And I mean, we could go down this rabbit hole a little bit anyway. They made the comment that the age of the cow calf producer in the U.S., the chances of us seeing a dramatic herd rebuilding is probably slim. I'm paraphrasing a little bit, but basically they said that we have so many older ranchers that all this talk of rebuilding the herd may not be as robust as some people think it could be. I mean, do you think that could be something to keep at the back of our minds as well here, Tyler? I mean, what do you think?
Absolutely. And I'll throw two more things that I've been arguing for 2 years to anyone that listened to me. One, you're right. The rancher's getting older, and we haven't done a very good job of replacing the rancher. Two, and that's largely because prices have been pretty poor, with the exception of the last 2 years, and then 2013 and 14. It's a great way to make a living, and it's a tough way to make a living. In the second thought that I've had is you can't believe the number of customers that I work with, and my book is relatively small, but I also do sell LRP insurance as well. So between my futures and options cow-calf operators and my LRP customers, the amount of customers that have backed completely off of cow-calf operations or substantially and went straight to the yearling business and running calves on grass is probably 30 to 40% of my customer base has either completely got out of the cow herd or have shaved back 30, 40, 50% of their cow herd and is running more yearlings. So, we've taken a lot of those resources away from that herd rebuilding. And then third, it's tough to go out and spend $25, $26, $3,000 on a young cow and pay 8 to 9% interest. You throw those three factors in, and I would say you are absolutely correct. It's going to be tough to substantially rebuild this cow herd. We might be facing low cow numbers for quite some time.
That's fascinating. No, good stuff there. It's something that I'm gonna have to sit down and look at some age numbers, I think, too, and put all this just into my brain. I got to sit down with this and think about it a little bit more, to be honest. But I think it's a very valid point, and it warrants some research. Hogs, real quick. Felt like a consolidation day there. I mean, that hog market's so oversold, 2 days higher. Just felt like we kind of pulled back ahead of the holiday, Tyler.
Yeah, it was oversold. It went down and took out some lows back in early 2024. Went down to them on Friday, rebounded, went right up to the 20-day moving average yesterday, met some resistance, and just at least on that July contract, kind of failed to find any momentum here today. So.
Yeah, something to keep an eye on there. The hog market's just been tough. All right, final things from you real quick. Anything you want to mention, reiterate to folks here today on the show?
Just remember, no markets tomorrow, so we'll get a day off, and then we'll be back at. I think they open tomorrow night at 7:00 again. So we get a vacation, but only a little vacation.
We'll take a little vacation when we can get one here and there. I'm with you on that one, buddy. I know folks can reach out to you guys as well. Take a look at your app and look at all your different analysis and more, and phone numbers, etc. agmarket.net for more information. Tyler Shao, agmarket.net. Always a pleasure, sir. Thanks for joining us on Market Talk today. Have a good one. We'll talk to you soon.
You bet. Take care, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.